Thank you, Mr. Chairman. Mr. Gerety, I want to address the area of non-bank financial companies with you, and specifically with regard to insurance companies, that even though they're regulated each by state pursuant to the McCarran-Ferguson Act, it's your understanding, and of course FSOC's appreciation, that they are systemically important financial institutions, correct?
Congressman, I wouldn't say the Council has made that determination.
But it is true in your example you just had there that you coordinated it with Hurricane Sandy in dealing with the solvency, I guess, of these institutions, being able to meet their risk when they had the issues in the Northeast with the catastrophe of Hurricane Sandy. Now, my concern is that you've got probably at least two companies, insurance companies, that may be considered SIFIs. Is that true?
So, Congressman, we're not. The Council has made a decision not to comment on specific companies until final determination.
So is it your, do you think that the insurance companies at all are considered systemically important financial institutions?
So, Congressman, I think that as I mentioned a moment ago, the issue is not whether the insurance.
Well, no, wait a second. Now, yeah, but you also talked about risk. Now, there's a different element of risk with regard to insurance companies. I mean, they based on risk-based capital in terms of what their long-term risk is going to be, as opposed to just statutory accounting principles that apply to most financial institutions. So, my question to you is that if you have insurance people on the Council, is it your testimony today that insurance companies are not going to be considered systemically integral financial institutions?
So I would make a distinction between the importance of insurance in the financial system, which is undeniable.
Would that be why the GAO report then explains that there is insufficient staff support for the insurance people that are on the committee?
So the Council has 3 members with insurance expertise.
But you agree that the GAO report indicated that they have insufficient staff support. Is that true?
So,
Ms. Flowers, is that true that your report indicates that?
Right. In our report, we note that the insurance representative, for example, doesn't have the entire agency as the other member agencies would have to draw on those resources.
So, Mr. Gerety, has the Council gone out to even the National Association of Insurance Commissioners to ask for advice and guidance as recommended by Dodd-Frank?
So the Council has on its membership, as you know, 3.
And I know it has the membership, but has it gone out? Has it reached out to the public? Has it reached out to those expertise or associations for guidance in terms of trying to determine whether insurance companies are going to be systemically integral financial institutions?
So, Congressman, it has reached out both to the public and to insurance experts.
Are there records of those reaching out?
Yeah, so absolutely.
Are there just minutes, or are there records?
The non-bank designations process made an affirmative decision to go through a rulemaking and get public comment, not just on an ANPR, an advance notice of proposed rulemaking, but on 2 separate proposed rulemakings. And in addition, we've started, with the help of Director Huff, who sits on the Council, to create information sharing agreements.
So this is most likely they're going to be SIFIs. But let me move on to another issue, and that's the Volcker rule. I firmly agree that banks should not be involved in proprietary trading when they're using insured deposits. There's no question about that. When we're talking about making markets, it gets a little bit more difficult. But what we're running into really difficulty is the diversity of opinions from agencies as to what and when the Volcker rule will apply. And I direct your attention to a letter of December 20th from the Bipartisan Policy Center. I believe you may have a copy of this. But their concern is that the adoption of the Volcker rule should be consistent among all agencies. Would you not agree?
Congressman, I think that's an important point, and Treasury has a statutory coordination role in the Volcker rule. I think one thing that is key to note in the experience that we've seen so far, although the statute doesn't require substantively identical
But the impact of not having a consistent rule is going to be devastating on the financial industry. Would you not agree? I mean, there has to be some consistency in not only interpretation, but also the application of the Volcker rule. And I think that's what this letter requests. But more importantly, I understand that Mary Miller just the other day indicated that she thought it would be best if there was a joint rule delivered. Would you not agree that a joint rule of all the agencies, the SEC, everybody involved, on the Volcker rule be given?
We agree that a consistent Volcker rule would be very important.
Would you commit the FSOC to making sure that a joint rule is issued with regard to the Volcker rule?
So I can't commit on behalf of the Council, and more importantly, I can't. There are statutorily independent agencies that are given the authority to write rules. However, I would note that in the proposed rule stage, all 5 of those agencies, notwithstanding their statutory independence, did deliver substantively identical proposed rules. So there is, I believe, evidence of a commitment to the point that you make about a consistent.
And do you believe that there will be a joint rule then?
I can't predict the future.
Mr. Chairman, I'll yield back my time.